What's going on out there, good people? It's your boy Look Around with LMD Trading, and we are back. Just finished wrapping up the daily recap for today. It was an ugly day. It was green, but it was ugly. It was ugly. Not proud of myself at all. So hopefully you checked out that recap. A little critical on myself, and I think it was well deserved, but said I was gonna come right back and go ahead and get the October recap out of the way. So let's go ahead. Let's jump right on into TRADERVUE, and we will see how we did. And we are right on time for the music to end. Boom. So October. Let's first start off with the calendar. This will probably be the thumbnail for this video. So, look at October. We had one red day in October. One red day. That's something to be proud of. But overall, I was a little hard on myself for October. I did like a little quick recap in one of my videos, and a gentleman asked in the comment section, what do I think is a good profit? And I had to think about that question. That was a very good question that he asked. And like I said, I was critical on myself because I was looking at the overall month. Good small loss on that day. But just looking at the daily P&Ls, my goal every day is to make 2R. So if I'm risking $50, my goal is to make $100 a day. And out of 21 days, I did that 1, 2, 3 days. Is that right? Let's go back. 1, 2, 3. Yep, I did that 3 days. So I was a little critical on myself. But then I had to think about the question that the gentleman asked. And first of all, that's a fairly subjective question. What it is when you look at it at the grand scheme of things. But then when I broke it down and I got thinking about it, I said, okay, my plan says that my goal is to make 2R every day. Now we know that is like almost impossible. You got to be on your game. You got to be sharp. My tool ain't that sharp right now. So I said, okay, if it's 20 days in the month that I want to be 2R, let's just say half of it. Let's say half of the month I'm 2R. So what would that be? So that'd be 10 days at 2R. That's 20R. And I'm risking $50 per trade. That's $1,000. Realistically, that's $1,000 per month that my goal should be. Now, if I can bang out 25 days, or if I could, not 25, if I could bang out 15 days, if I could bang out 15 days of hitting target, then that's good. But 20R is what I realistically can see myself making. So that would be my answer to that gentleman, is that realistically, my goal should be 20R. And then that makes it easy for anybody else that's trading, because your risk level is going to be different than my risk level. But then it's just a matter of plugging in the number. So let's say your risk level is $100 per trade. So now that goal will be $2,000 a month, and so on and so on. If you're risking $1,000 per trade, then your goal will be $20,000 per month. But nothing changes. You just scale up, and you scale up based on your experience and based on what your bank can support, based on what your account can support. So 20R, $50 risk, it's $1,000 a month. Let's see what we did. We'll go to detailed, and let me put an end on there because this is showing November numbers too. There we go. So October 1st to the 31st, 984. So based on that, we're right about where it should be. Right about where it should be based on how I just kind of calculated that. But let's look at some numbers here. Average daily gain is right about 1R is what we're making. Again, 20 days, 20 trading days in a month. Take that in half. That's exactly what we did. These numbers here need to improve on that. Average losing trade is good because, again, we're risking $50 per trade. But I need to work on getting this number higher. And we're already starting the month off November with a low average winning trade number. Our average, it's a good average. 76% of the time we were right. 21, or not right, but we were green in trades. 21% we lost. I take a lower winning percentage and a higher average winning trade. And that could have been done this month in October. I was getting out of trades early, and that's why this number is so high. I was getting out for small gains, which affected that number. Had I stayed in some of these trades, they would have failed, but a majority of them would have hit target, and that would have increased that number. So the average would have went down. My average overall is usually around 65, 65-30, 60-40. But I'm letting trades work a little longer with that percentage. So that right there tells me that. Let's come over and look at largest loss, 57. That's not bad. Catching a little slippage maybe. Largest gain, basically 3R. It's pretty good. We have already skewed this number in November. We are 2 days into November, and we're going to have a largest loss of like 100 and something bucks. It won't show that I increased the risk on those trades. It's just going to show that that loss is higher. So that wasn't really a smart thing to do, considering that I don't plan on keeping my risk at $100 the month of November. Average hold time, 8 minutes, 9 on a loser, 9 on a scratch trade. When we dig a little deeper into this, we're going to see where that time frame actually falls at. Let's come down. I really don't pay too much mind to this, and I'm surprised at this one. Wednesdays is normally I'm super tired on Wednesdays. Super tired because Sunday, Monday, Tuesdays are very long days for me. I'm talking about days where I don't go to bed till 2 o'clock in the morning and I'm back up at 6 o'clock in the morning. Sunday, Monday, Tuesday. So Wednesday, I'm usually dragging, but Wednesday was our better day for the month of October. Come down to performance by the hour. This one should always be good. This is actually just 30 minutes. This is 30 minutes in the market because the market doesn't open until 9:30. So that's 9:30 to 10 o'clock. We've made $394. 10 to 11, we get a full hour right there, and we get a full hour right there. So we make most of our money the first 30 minutes of the market. And that speaks to when I tell people that I day trade and they assume that I'm trading all day. No, I make most of my money, I tell people, in the first hour to hour and a half, but it's really in the first 30 minutes. The first 30 minutes is where most of the money is made. And then you see, took a couple of trades, power hour, as they call it, 3 o'clock to 4 o'clock. That's another fairly volatile time in the morning. Didn't take no trades from 2 to 3, which is good. That's normally that 12 to 2. It's fairly slow, low volume. Nothing's really moving. Everything was intraday. This is what I wanted to look at. Performance by intraday duration. So this is by how long the trades were held. Holding it under 1 minute, we didn't really make no money. 2 to 5 minutes, decent. 5 to 10, decent. And then you come down here, and this was 20 to 40 minutes, was fairly decent. So kind of just shows time frame wise. Those ones that I'm in and out quick, no, let that trade work. Let it work. And we see about 2 to 5 minutes. Actually, we can say 2 to 10 minutes. Because that's about 2 and 3. About, what's that? About 450 or so. So got to let those trades work. Got to give them time to work. Let's look at price and volume. Performance by price. $50 to $100 per share, where we made the most money. And then if you look at the next two, you basically could say $20 to $200. Inexpensive stocks, you always will hear me say that I don't really like trading those. I need to weed those out of my gap scanner. And that's why I was saying a lot of this data that I'm looking at here, I'm going to try to implement in my scans. So we could say 10 to 200 has been, it's a good range. It's a good range. Let's look at performance by volume traded. This one here, yes and no, you can go with it, but it's just based on stop size. That's all that's based on. Because I'm going to buy 100 to 500 shares. It's just based on what the stop is. So we see, I don't trade. These are like the high price stocks. This is like a Tesla. Or those high price stocks where it might have a $5 stop and I need 10 shares. So that there I wouldn't really use too much. But it almost kind of goes hand in hand with this. Because on these cheap stocks, I might only have a 2-cent stop. And then I need 2,500 shares. So I'm down here. So these kind of work hand in hand. They do kind of work hand in hand. And then performance by in-trade price range. That one, I'm not sure on what that means. Not sure what that means. I have to do a little research on that one. Let's click instruments. Made most money on HOG. Lost the most money on NTNX. Scroll on down. Performance by instrument volume. We see the 10 to 24.4 million. It's good. But this was one that I was looking at when I first was kind of reviewing my recap. Performance by instrument volume, by instrument relative volume, percent of 50 moving average. We see right here, 2 200 to 299 and 300 to 499. What I want to do is try to implement a scanner. I'm going to try to build me a scanner where I can search for stocks that their relative volume of the 50 moving average is that. And then if you come down, performance by instrument, prior day relative volume percent. It's another one that I can kind of build a scanner on and try to find some of these stocks, maybe the day before. We see that this one right here, 125 to 149 is where we made the most money on. So I'll be trying to build a scanner that will scan for these and maybe be able to get ahead on those. Performance by instrument movement. We see when it moved over 10% is where we made our money. Less than 2 to 10, these are shorts. So, and then this was another one that I liked right here. Performance by instrument opening gap. When it's gapping less than 2%, so that's a short. And when it's gapping over 2%, these are longs. So if a stock is gapping over 2%, that is where we've made the most money at. When it's only gapping 0 to 1%, made $100 off of it. 1 to 2% made 25. 0 to 1, nothing, minuscule. Won't say nothing, it's $4. But -1 to 2 is literally nothing. So that's something that I can easily plug into my scans that work right now. Just put in percent gains. If it's not gapping over, let's say gapping over 1% or under 2%, don't even really need to be looking at it. Don't even need to be looking at it on the pre-market watch list. So this is all data that's good. I can use this data for my scans. Performance by instrument day type. So inside the range, trending up, or outside the range. Everything basically has been outside the range. Again, this is data that I can use. Performance by instrument average true range, or some people say average trading range. When stocks trading range is $2 to $5. That's where we've made the most money. These are going to be the low cap stocks where their average trading range is like 50 cents. So it only moves 50 cents in a day. Can't really get any movement out of that. But these are the mid to higher priced, mid to larger cap stocks. Then you look stocks that have a 10 to 24.99, we negative. We lost $8 on that. So again, very good information. Performance by entry percent of ATR. This one, I need to do a little research on that one. But based on that, it's saying that if it's 200% or more of the ATR. So I need to figure out how that plays in. Performance by relative volatility. Again, something that I would need to research on, but it looks like the 300 to 499 has been the sweet spot. And then performance by entry price versus 50-day simple moving average. We see over 5 and less than 5. These are shorts that's down, and these are longs that are up. Again, something that I may be able to use to work on building a scanner. And like I said, someone that kind of criticized Thinkorswim scanning capability. I think if you have the right data, Thinkorswim scanner is very powerful. Because like I said, I love my previous high of day, previous low of day scanner. It's always throwing off some good ideas. And I think if I can implement some of this data, I think I'll be able to build some pretty good scanners. So be on the lookout for that. I don't think there was nothing else really in here. We made $1,674, but we lost $690. That's just a part of the business. Everything can't be blue. The goal is to have it like that. You want that blue side to be bigger than that red side. It's just cumulative P&L for the month, just showing how we did. Basically, in a nice uptrend. Had a little slight pullback there. Came back up. This is that M top. You don't want it to see it come like that. It didn't. Pushed up. Kind of consolidated. Pushed up. Kind of trended up. So, nice curve. Nice P&L curve right there. Cumulative drawdown, just that one day. That one day on the drawdown. And I think that's pretty much it. I don't really too much concern myself with liquidity. Most of this you have to upgrade, and I'm good right there at the silver plan that I'm at. Market behavior. I don't really concern myself with what it's doing based on what the SPY is doing. This is basically saying that you're either trading with the trend or trading against the trend. Not really concerning myself with that right there. And that is going to be it, y'all. That's going to be it. I hope y'all enjoyed this recap for the month of October. Like I say, I do believe I got some pretty good data out of that. And that's what it's all about. Every day you need to review your trades. But at the end of the month, you can get some good information as well. So I'm going to go ahead and wrap this one up so I can get me some rest because your boy is tired. If you hadn't already hit that like button, please do so. If you are not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. How did y'all do this month? How do you think November is going to go? I'm one of those ones. I take each day as its own day. I don't really base what a month is going to do. I trade each day as its own day. So that's me. That's how I look at it. But we're going to wrap this up. We'll be back at it again tomorrow. Peace.